what I wanted to talk about today was, I've not seen too much regarding any specific questions. So I wanted to talk about a 2-day reversal. This is a this is a trade I'm quite a big fan of. It's a trade that I know some of the other guys are fans of, and may have different sort of parameters for it. But it's a trade that I particularly noticed in the DAX. And what I try and do with any trade is build up a sort of map of how exactly you're going to go about this trade. What needs to happen beforehand, what you then want to see next, and then what kind of trade this is going to give you. Now, to start with any trade like this, really all it's giving you is an idea of what could happen, where you might be able to take a trade on. Then the next stage of that is the execution. So the first part of the map in the trade is how it trades in a certain way, one direction. So with a 2-day reversal trade, what I'm looking for is an impulse move up, or down. We'll show you an example the other way in a minute. Impulse move one way, you then get a consolidation. Now that's fine, that could mean that we continue, so not necessarily a reason to think 2-day reversal, but it's what happens during that consolidation that helps. And then it's a case of once you've seen that, you've seen the impulse up, limited reaction, and then you're trying to pick the areas where you can play it back in the other direction. And also beyond that, the next stage of it is how it does it. That's a crucial thing with every trade. It's often something that people miss out as well. The easy thing with a trade is to go, right, well, here's a trade, this is where you get in, this is what it's going to do. The hard part of it is picking the points where you can say, okay, this is a trade, I'm going to get in here and it's going to do this, it's going to trade like this, it's going to give me opportunities to get in certain points, it's going to trade in a certain way. That way, when it comes to staying in the trade and holding on to it, you're already ready for what's likely to happen. You're not surprised when it has pullbacks, you're not surprised when it accelerates and perhaps leaves you the opportunity, leaves you not being able to get filled. Because you know that, you don't get left not getting filled. You will be willing to go at market, be more aggressive on your entries. So let's talk you through this trade. This is something that I've sort of been tracking over around about the last 18 months in the DAX. And the idea of the trade, where I'm sort of noticing it, I'll show you a Bund example as well. It's not just a DAX trade. I know that a few of the sort of more Bund focused guys are very keen on this trade in the Bund as well. Now, what I'm looking for is typically these trades. Now I've got on the left hand side of 1 minute, on the right hand side of 60. Typically these trades come about after phases of consolidation where you built up a range. And so in this example, the DAX built up a range down here, we then moved a little bit higher, built up another range. So that's all looking good for a move higher. What we then get is this pattern where you get this drive up, consolidation in the box, begins to look a little bit like a flag. Flag fails, nothing really happens. This you can see from the price action. This is the key thing on these. What's the price action like? Price action on a day like that is very lethargic. Not much happens. Every time we get to a high, the market just washes back down. Every time we get towards the lows, it just gets bid back up, but it's very slowly. Doesn't give you any clear direction, which is fine. That's what you expect from consolidation. But it feels particularly weak to the upside. And that's a crucial thing. You don't get any sense that this market's moving higher. Also, the nature of this move up is quite key. What causes it, where it comes from. If this is a very quick move up that seems, I don't want to say out of the blue or not normal, but if it's a move that doesn't really seem to have too much footing in it, that's one that's more likely to turn around as well. So there's sort of your two bits of info that you're really looking for. So how do you play it then? Now I've got a couple of ways that I'm looking at to play these types of trades. First up, with these types of move up, typically it's quite easy to pinpoint an area where the bottom of this consolidation is. Now I think this works particularly well when you get a gap as well. So if you get a move up, say for example you get a move higher, gap up, and then it consolidates, that gap becomes the point where your access point is. That's where the market's going to accelerate. That's where it turns over, where everyone buying up here gets trapped and they all come out together, and that's where you get these quick moves on the 2-day reversal. Alternatively, and this is something I've begun noticing, that this broke down late on, so the last couple of hours of the day, so right deep into the US session in the afternoon. It then, the next day, fills the gap, and then you get the fast move down. So if you don't get in on this consolidation break, the move back up to fill the gap provides you an entry. Then the move through the initial balance low provides that continuation. This is what we saw up here in the DAX. There's the move up to fill the gap, reasonably quick drop back down. That gets you back towards the initial balance low. So the initial balance low comes in here. So that drop from the gap to the initial balance low is pretty quick. 3 or 4 minutes. What you then get is a much greater acceleration. You'll typically get a little bit of consolidation somewhere in a move, a bit like if you're looking at a DAX right now on a 1 minute. We got a quick drop out, consolidate sideways, and then another fast drop lower. So that's what you're expecting, reasonably quick move, consolidate, and then the second phase of the move is the one that generally accelerates even more. So at any points during this trade, what you're expecting is the counter move to accelerate, to be very quick, to provide you opportunities, but opportunities where you've got to be quite aggressive on these trades. You are likely to have to go at market. You are going to have to wait for a wash back up to get in if you don't sell it in towards these lows. So that's the pattern, that's what you're looking for. Also, it will often provide very big targets. When you go onto an hourly, you'll get a couple of hours that take out significant amounts of range. This drop took out the whole of this range, which is a full 150 ticks. It then goes on for the rest of the day and takes out most of the next range, which is then another 120 ticks. So you got 150 here plus 120. So you get some very big moves on these type of setups because of the fact that this very lethargic trade is creating a lot of positioning that then gets turned over. Now, going to give you another example, and this is from the last couple of days. And potentially with the drop that we're seeing today, you've got another one.